Okay, good morning. I wanted to take a look at GameStop and BlackBerry because we've been getting a lot of questions here about the stock over the past couple of days. If anyone's seen the news, you probably realize what I'm talking about here with respect to the fact that Wall Street Bets, the Reddit subgroup, has effectively taken on some Wall Street hedge funds that were trying to short the stock and is trying to create a short squeeze. And I want to talk a little bit about the trading psychology behind a short squeeze like this, the pump and dump scheme or similar type price action that we typically see with the pump and dump scheme, like we're starting to see with GameStop. And just how do you go about evaluating the chart to determine at what point does this pump and dump scheme no longer work? And I'll take a look at both GameStop. We'll also take a look at BlackBerry just to see kind of the trading psychology and how markets react to this type of price action and show you the type of metrics that we use to gain some insights into whether or not this will continue. So what I have here on my chart is a 15-minute chart here for GameStop. And I'm actually going to rewind back a little bit here to January 12th and the 13th. The January 12th is when GameStop was still trading around $19. This is when the news that Citron, the short seller, was initiating a short position, a fairly sizable short position on this particular stock. And what happened was on Wall Street Bets, which is the subreddit group of day traders, of potentially or mostly millennials, effectively saying a big FU to the short sellers and creating a short squeeze and are trying to create a short squeeze. So we have a lot of investors that basically started to buy this stock for no reason other than trying to squeeze out the shorts and started to run the stock up from $19 to $38. Now, this is a fairly small float stock, so the push happened relatively quickly. And one of the things that we utilize to gather some information about these types of trades is a metric called volume weighted average price. So when you use a trading platform or a charting platform like TradingView, you can put on what's called an anchored VWAP, which allows you to basically see what is the average volume weighted price with any starting point that you would like. So what this gives you a sense for is where is the average price that's being traded from a certain point on. This gives you a sense for whether investors are underwater or whether they're profitable or underwater after a certain point. So what I have is my first anchored VWAP placed right here at around 11:30 a.m. on January 13th. After the initial buyers got into this particular trade, the average price, as you can see, is represented by this red line. And when the stock is above this red line, that means the average investor in this particular stock since then is profitable. When it's below that line, that's when investors are unprofitable. As you can see, pretty much since the 13th, the stock's predominantly stayed above this initial red line, meaning the initial pump and dump investors, the investors that got in very early, are still profitable pretty much throughout the entire phase of this movement. And for quite a few days here, the stock basically was range bound between 34 and 42 or so. And even investors, there was the second pickup here on January 19th around 10 a.m. As you can see, this giant spike here in volume. And even investors that got in relatively late for this particular move, as you can see throughout the day, through the 20th, the 21st, these investors were underwater a little, but as again, largely the early stage investors in this particular squeeze are still profitable. And really, we saw this big move here to the upside here a couple of days ago when the stock rallied from 41 to 70. This is really what caught the media's attention. And once the media caught on, this kind of continued to accelerate that move to the upside here. So I put another anchored VWAP here on the 22nd around 12:15 at noon. And as you can see, pretty much that's when we started to see some euphoric trades to the upside from 41 up to that $75 level, $76 level here. And then for the rest of the day, the investors that got in on this third wave, right? So let's call this the first wave, the second wave, and the third wave. Investors that got in on this third wave largely was underwater here up until at the end of the day here on the 22nd. And then on the 25th, on Monday, yesterday, this is really where we saw this kind of blow up and the stock went from 64, opened up at 90 or so, and traded all the way up to that 159 or so. Now, when we put the anchored VWAP here on Monday's open, that's really where we start to see that, with the exception of this initial move here to the upside, pretty much everyone that got in at this very late stage started to be underwater for pretty much most of the day. And what we start to see is that as long as it stayed above these prior red lines, we found support until it broke below this and broke all the way down to the next red line, because basically all investors that got in on this fourth wave, or this last wave, if you will, were underwater. And once it started to break below the previous line, then the investors from the third wave was underwater. We saw some quick selling here to the downside that was then brought on by some more buying here. But as you can see, subsequent moves here to the upside are faced with vast selling. This is because all the investors that got in late are, once they get to a point where they are potentially profitable, or even just at break even, they're going to get themselves out of the positions, because these investors no longer see an opportunity for them to make money on this particular trade. So as soon as they get back to break even, they start to sell. That's what we're starting to see a little bit more of here today. The question is whether or not there's more capital invested that want to get in this late of the game. Basically, the later you get in, the worse it becomes for you, because you're the last person left holding the bag, if you will. So these are the levels that we're really paying attention to: 76, 63, and 54. Once we get below 76, then basically all the investors here in the third wave are underwater, and they're likely to start closing their positions and closing their positions. And that will get us down to about the $63 level here. The $63 level goes back all the way back to the second wave. If the stock gets below 63, then all the investors that have invested since then, you're going to have more investors that are unprofitable than investors that are profitable. And that's going to cause potentially more selling down to the $54 range. At the $54 range, pretty much all investors since then, you're going to start to see more than half of them are unprofitable. If we get below 54, that's when we're going to see that acceleration probably back down to the $20 range, which is the original stock price before this whole rally started. So that's really how you can go about looking at, the psychology, or the different waves that happen in a short squeeze like this, how they work, and how to analyze where traders are profitable, where they're not profitable, the equilibrium that we currently have seemed to found between buyers and sellers here. As you can see, sellers up here, buyers down here. Once you get below some of these levels, that's when you're going to start to see some acceleration here to the downside. And again, identifying the first, second, and third wave of investors. This last fourth wave, I think those are the investors that are really kind of caught out and are seeing substantial losses here. As you can see, pretty much since the start of yesterday at around 11 a.m., all of those investors are now underwater. They're probably figuring out ways, trying to get back to break even. Some investors did get back to break even here earlier this morning, but it's starting to sell off here again. Breakdowns below the $76 level will start bringing us towards the $63 levels. That's just a quick view here on GameStop. And I'll take a look at BlackBerry as well. Similar type views here. So this started here on January 14th when the stock was trading around $7 or so. You had that initial wave, but most investors really didn't get in until the 15th, the morning of the 15th. For those investors, their average price here is around $14.36 since then. So we've had multiple waves here on BlackBerry. The first wave here on the beginning of the 15th. You had a second wave here on the beginning of the 20th. And then you had, I would say, a big wave here yesterday. But most of those investors here yesterday, as you can see, currently underwater. Any moves above the average price since yesterday has mostly been met with selling, because these investors on the last wave have all been largely unprofitable. So when they get back to break even, they're more likely to sell their positions here rather than continue buying. You have a ton of support here to the downside as different waves of investors, and we can delete some of these waves as some of them don't have any significant volume behind it. Most of them actually don't have significant volume. So the ones with significant volume, from what I can tell here, are the initial wave, Sorry, even this initial wave, I don't think has a lot of volume here. It's really this first wave where most of that volume is. So, the average price since that first volume for first trade was $14.36. The second wave was $15.77. So as you get here to the upper bound of this range here, and BlackBerry could very well have one more wave here to the upside of buying, but we're already in the pretty late stages of that third wave of buying. If this cannot get past this upper bound, which, as you can see here, we saw the same thing here, right? Where for most of the time period, these investors were underwater until you got that breakout here. That's when a lot of investors became profitable, and then you have this last wave that we're currently in. The question is whether this gets down to this 1577 level. If it gets to that level or below that level, we would likely see a very quick acceleration down to this 1436 level. And if you break below 1436, that's when pretty much all investors from the beginning till now, where more than half of those investors will be unprofitable or underwater, and that's when you have the capitulation and a pump and dump scheme, or the waves of buying and selling in a pump and dump scheme basically peter out and diffuse. So that's really how you can look at these types of extreme price action that really go off of nothing other than what is a message board, Wall Street Bets, a fairly sizable message board, and just how pump and dump schemes actually work from a trading psychology perspective. So I hope that was helpful in giving you a better understanding as to how to view these types of moves. Using a platform like TradingView, which I'll include a link here at the bottom as to how you can sign up and use this anchored VWAP metric, which is available here to you in the anchored VWAP section here in the upper in the upper left-hand corner, creating these metrics so that you can see it on yourself. I use a 15-minute chart. You can use any time frame that you'd like, and it gives you a sense for what is the average price traded on an underlying stock. So if you like this, I hope that you like this. If you do, please hit subscribe to our channel to get more updates as far as market updates, options trading strategies, and please leave a comment below if you have traded BlackBerry or GameStop, and let us know, what has your experience been in trading this? Were you part of the first, second, or third wave, and how are you determining how long you hold on to that trade for? With that, thank you so much. Have a great trading day.